Hello, Warriors. How's everyone doing? Let's have a great week.
Morning, Dale.
Morning, Ryan. Couple of big news events this week. Of course, the Fed, probably one of the most important meetings of the Fed in quite some time. And then for oil traders, we have OPEC. So how you doing, Mashari? Welcome to Face. Nice to meet you. Hello, Hugo. Brock, how's it going, my trading warrior brother? And Hugo. And Gorshi, how are you? Yeah, we start at the top of the hour every day, Mashari. Hiya, DJ. And Darren Monroe. Nice to meet you too. Okay, so I have a couple of scenarios how this may play out in oil. I've had a couple of good weeks in oil. It's been ranging. You quit many years ago, and now you're back. Why are you back now? Huh? Because it's like Hotel California. You could check out, but you could never leave. Or the mafia. They won't let you leave. You're a made man. Okay. So good luck this time around. So use less leverage. Okay. Use less leverage. Use very low leverage if you're starting up again. Okay. All right. So, had a couple good weeks fading crude, and I have a couple of scenarios, and I'm not sure which. I mean, it's coin toss on OPEC. I think they're greedy enough not to want to put out any more inventory. So, one thing that may have been holding this back from topping out, besides all the, it's in backwardation, which is a sign of a strong bull market. Also, the whole commodity boom. But what may have been holding it up is, can you see the daily RSI up here? So we had a little divergence at the top, but it was over 80. And if we get some bullish news from OPEC about production, that they're not going to increase it. Now, if we make a new high, the daily most likely will not confirm. And I drew a little megaphone formation here. Hi, Mark. And this is kind of what it looks like, right, off these two highs, and it's going to come in up here. Well, let's call it a little over 86, 86.70, which would be about $1.50 above these highs from a week ago, 2 weeks ago. 85.80 you're looking for. Okay, well, the line comes in a little bit higher than that, Jays. So we'll see what happens, but I'm going to wait for OPEC and not have FOMO. FOMO says they'll have a piece on into OPEC, but it could be up $2 in my face on OPEC. So I'll just stand aside on this. EG, grinding. It did have a 2-week reversal last week, closing over 84.31. Just a grinding move. Let's see what the 2-week is on it now. It's this week right here, 84.67. So we're right there. Still think there's a chance for a bottom here, because even if the dollar rallies, and this was interesting. Friday I brought it up early. I said, hey, Blake, we have looks like a false breakdown here. And the discussion really didn't go any further, but boy, it sure did turn out to be a false breakdown.
Oh, and the dollar. Yeah, actually, and good morning, Dale.
Good morning.
Yeah, I was looking at that over the weekend, and on the week ahead video, we put in possible false breakdown. It's actually a flag pattern too. So, but with the events coming up this week, I don't think it's going to break out
to the
ahead of
upside.
the FOMC. Yeah, I
Yeah,
don't think so.
Yeah, it's almost like, when you think about it, like the reaction in bonds and the dollar, it's almost like the market's expecting an aggressive taper, like maybe 20 billion, because the bonds had a decent week too, and they would only have a good week if they were expecting too much tightening, that it might slow
Yeah,
things down.
I mean, there's a lot of debate about that. I'm gonna, I'll wait to give you my comments.
Yeah.
I know Ryan's here, Stelios is here as well, and I'm gonna let those two
Okay.
guys jump in and talk a little bit, and I'll talk a little bit about the FOMC in a few minutes. But
Okay.
yeah,
I'll get the guys on here. So,
cool.
Ryan, we got some continuation in US dollar yen. It looks like, we have a little wick up here. It's trying, there's someone selling it up here, but,
Yeah.
this kind of looks like a flag to me that's developing. I don't know if I'd want to be short. I wanted to buy it down here.
You and everyone else.
Yeah, I know. That's why it didn't accommodate people. Now I'm thinking if it gets down here, I should leave it alone. But
yeah.
it looks like a flag.
Yeah, I think a lot of people, were waiting last week just to see if we got some end of month move that took us down there. But once again, we look at the bank models. They were saying, selling US dollars was the way the model's predicting it end of month, and obviously last day it's the complete opposite. So a bit of a mess as usual. But it's back on the dollar yen's back on the grind again, higher. But as you say, it's hitting those highs, and we're not getting above it. It's a bit of a mess all round, and it is a very strong dollar move. But is it risk off move? Because obviously, like you mentioned, yields collapsed. We were sitting pretty looking at 170, last week, 2 weeks ago, and here we are back under 160. And you think, here we go again. It's the same old story. But end of month, rolling into a Fed week, liquidity isn't probably that great. Everyone's sort of sitting on their hands, waiting to see what's going on.
I mean, that's what, the prudent part of me says, just wait for all of this to get out of the way. And, so if you miss something that you were expecting to happen, have enough confidence in yourself that even after the news, you can finesse a position, even if it's not that day, that there'll be another entry. And you don't know how many years, and I still struggle with it, I should have a piece of crude on in case they surprise people and increase production in crude. But yeah, I feel that way, that I just want to NFP. Yeah, then you have NFP at the end of the week. I mean, this, is the kind of week where you could give back a lot if you've had a couple of good weeks. And
you do something silly, but it's tough as a trader. You look at the end of month stuff, and I mentioned before, I hate end of month. It just throws up so many different nuances and just scrambles the markets. So you think, okay, I'm not going to do anything. So that's maybe 2-3 days you don't do something. Then we're into a big central bank week, BOE, Fed, all those, and you think, right, well, now I've got to sit on my hands a bit, and I don't want to get positioned for those. But you got to trade in between, and if there's levels to trade, then you can have a tight trade, but you don't give it much room, and you don't get stuck in the middle. That's the biggest piece of advice I can give around these sort of things. Don't get stuck in the middle. If you've not got a level to trade off of that you're happy with, don't just trade for the sake of trading, because you end up watching a market go sideways for the rest of the week or till the big events, and then you're just pulling your hair out. What's left of it.
And the on again, off again correlation between yen and metals came in as stated. It's not reliable. It was Friday yen up strong, metals down pretty hard, but follow through to the upside in the yen, and the metals are all a little bit higher. So I'm still thinking that we could, I want to see how everything reacts to the Fed, actually.
Yeah. It's it's going to be a big driver, obviously, because we need to know what the taper is, how long it's going to taper for. I don't think that the big reaction is going to be over the taper per se. Whether it's 15 billion for 7 months or 20 billion for 6 months, it's, we're mincing around the figures here. I think the market potentially is already shifted onto rate hikes, and I think that's where potentially some disappointment is going to come in, because I'm sure Powell's going to dumb that well down. He's going to make sure that the whole world and his mate knows that, yeah, we may be tapering, but rate hikes are still potentially a long way away, and not to start getting excited over that. Just the same as they did with the taper. They led us all, yeah, maybe we'll taper eventually. Led us on for months until finally we're at this point where they're going to taper. So it depends how much the market's into the hawkishness about it. They're pretty hawkish on the BOE, could be pretty hawkish on the Fed. We've got the RBA as well. They're staying silent over their April 2024 bond buying. Their yield curve control. They all of a sudden stopped controlling the yield there, and everyone's like, oh, they've abandoned it, thrown it out the window. We're all pretty surprised in the chat room that they've just done it silently. Not even a mention, public note, operational note, nothing. So that's another big question that needs answering, because if they are starting to abandon yield curve control, or they're thinking of pulling in their 2024 rate hikes, could be a big hawkish move for the Aussie dollar as well.
I miss Alan Greenspan. God, I miss that man.
What, the scene of him running to the Fed with his briefcase?
Yeah, and I just, God, give us a surprise, like half a basis point rate hike. That would be awesome. That'd be awesome for volatility. Come on, somebody do it. All this like telegraphing the very next move 6 months in advance is for the birds. I know.
They're volatility vampires. That's what they want to do. They want to suck the volatility out of it, and they've done a good job.
That's what it is. I mean, the Fed and central banks. I mean, you remember Trichet, the stability. You just want. I mean, that's what they want. They want to promote stability and low volatility in the markets. But man, that sucks.
It is, but then gives us the opportunities, because like I've been saying for the last couple of weeks, I'm happy to try and call the RBA out with their 2024 rate hikes. I think they're talking out their asses. If they're close to hiking by the end of next year.
Right. Well, so we were just in the chat room, and a gentleman named Daz popped in from Australia just a moment ago. We were just talking about that, and I'm like, well, it's going to be forever before they raise the rates, raise rates. And he's like, well, house prices are crazy, and inflation and commodities. Like, I wouldn't be surprised if they start raising in, the end of November 2022. And, which is a good point. I mean, everybody's expectations are going to be moved a little bit, and Powell's going to do his best to try to subdue expectations that, rates are going to be going up. I mean, there's a bank over the weekend, a major player that actually sees the first rate hike in June of 2022, just as we wrap up tapering. So, I mean, that's where, and right or wrong, whether you agree with that analyst or not, I tend to be in the camp that I don't. I think that's a little too aggressive, but that is the case, right? So you're getting all these expectations moving up. The Fed's going to try to taper down on that taper hike. I didn't even mean to say that, but it came out that way. So, hey, so Ryan, we have other central banks that are meeting this week.
Yeah, it's the RBA this week, isn't it, as well?
Well, we have the RBA. Don't we have the Bank of England?
Yes. Bank of England, yeah, as I mentioned.
We got the BOE on Thursday, and then we have the big non-farm payroll. And good morning, Stelios. We got big non-farm payroll on Friday. We got Canadian jobs data. So a lot of potential volatility this week. We actually have New Zealand employment as well, and then all the ISM data, pre-NFP data that comes out and potential move market. What should we expect out of the Bank of England this week? Because that's another case where the market is starting to, the rate market is starting to price in aggressively the Bank of England raising rates soon. So what do you guys, since you both are in, well,
Europe. Well,
I was going to say that, no, I can't say that
across
because
the on the
Brian
other
is not
side
in
of the
Europe. He
pond.
is in the UK. There's
All
a
right,
big
the other
difference.
side of the ocean.
They're on the other side of the pond. That's correct. But what do you guys say about the Bank of England going into this week?
Well, personally, I mean, I think it's pretty much a given that they're going to be hiking to 25 basis points, so hiking 15. And we said this last week, the market's getting ahead of itself a little bit because the Bank of England is coming out a little bit more hawkish than they have been recently, and the market's pricing these 15 basis points for this week, and possibly another hike, another 25 by. Is it by January or something like that, really early next year? So market's pricing stuff happening, and it could well happen. But as always with these things, the market tends to get ahead of itself a little bit, and that's why I think that, and I've been saying this for a while, Euro pound is, if it gets in the low 83s, low to mid 83s, I really, really, really want to buy it.
But let me ask you that, since you just pointed that out, and then Ryan, we can talk about this as well. We did actually breach. I think we breached 84 pence. Maybe we didn't. Maybe it was
marginally. Yeah. Marginally.
It was just like.
Did we? When did we do that?
I guess no. I don't think we did. It was actually. Yeah, we didn't. Well, maybe it depends on your feed.
Yeah, but 84.02 I think was low because I bought it at 05.
Yeah, but here we are, probing back at the previous lows back in April. Was that it in the euro sterling? I mean, yeah. Again, this probably goes more around the Bank of England rate decision this week. But I mean, I'm seeing some false breakdowns here. Maybe we do get a bounce back above, 85 pence. But what do you guys think? I mean, and I'm sorry, Stellius, I didn't mean to
no worries.
jump in there, but the I wanted to pull up that chart because you're expecting lower levels, but do we get a false breakdown? I don't know. Here we go.
I think we could get that on Thursday. I think the Bank of England could be more hawkish than markets expect, maybe, and that's going to bring strength to the pound, and I think that will be the perfect opportunity to short it, because there's only so much that the Bank of England is going to be doing, and for people who have been following central banks, they're a bit of a dinosaur. They move slowly. They're not like Norges Bank or these more nimble central banks. So I think the market is probably going to get a little bit ahead of itself, especially if they're more hawkish than expected. Pound rallies, and then that's, I think, the opportunity to sell it. And remember, I'd been bullish the pound for a while. I remember when euro pound was hitting 92, 91, 92. I was saying, look, I think this is a great place to start accumulating shorts, which is the way I trade anyway. I'm not a day trader, and now I think we're getting to the other end, and I'll be definitely looking to buy low to mid 83s if we get there. I don't know what Ryan thinks, but
I think it's all on depending on what your time frame is. I think for this week, there's a chance that the market is perhaps looking a bit more hawkish than the Bank of England's going to be, even though the Bank of England, what they've been saying has sounded pretty hawkish. What Bailey's been saying, if inflation is a problem, we're going to act on it. You don't get a much clearer indication than that. So, but I still see scope for the markets to be a bit disappointed, and then we could get that run up, through 85. I'm happy to sit in my longs for now. I've got good margin in it, so I've no need to panic. But after that, I think then if they do move to a proper hike cycle, and we are talking about, getting to 1% rates by sort of the middle of next year, that's when we get the next shove lower, potentially down to that 83, 82 level. But it's, it depends on the time frame you're looking at, and we're going to need to hear a lot from Bailey, but I'm looking at the expectations. Not all the market is expecting hikes. I mean, just looking at Reuters and their polling of economists and whatever, the media expectation is for unchanged, and for the vote to go 6-3 for 3 people looking to hike, 6 people staying unchanged. So that that isn't very hawkish, even on this 15 pip hike that we're potentially looking for this month. So not all the market is right on the rate hike scenario, even for this initial one. But I think this initial one's coming.
Yeah, and the Sonia market is pricing it pretty much fully last time I checked. So I don't know which banks are not, they think that they're not going to be hiking, but the market is telling us otherwise.
Yeah.
Well, I was just looking technically at the sterling, and we are still well below the 200-day moving average. We broke this. We had a wedge that was building into last week. We broke lower. I expected us to break below 137 after we broke down, which we did. But pullbacks have been fairly minor, probably because equities continue to be very strong, and so as equities continue to stay strong, the dollar has been weak. But obviously on Friday we saw, as you pointed out, Ryan, the dollar really caught a lot of people off guard because the market was looking for dollar weakness going into month end, and we got the exact opposite in a big way. I mean, so it was something I talked about on the week ahead video as well. If you guys missed that, we had a real strong move there. But let's shift gears, guys. Let's talk about equities. So here we are. The S&P
at your 1.618.
Oh no, we hit the 127% extension.
Okay.
And also the inverted head and shoulder pattern has now reached expectations of the, now some other people may look at it.
I thought you had 46.44. Okay. I guess not.
Some people may look at this, which is 46.88. Me, I look at it was the neckline was a diagonal neckline. Regardless, we hit the 127% extension, and at least the minimum expectation of the inverted head and shoulder pattern today. So here we are, November 1st. Markets are defying gravity again. How do you guys feel about equities at current levels?
Moon shoot, isn't it, at the moment?
It's what?
It's a moon shoot at the moment, isn't it? It's just you can't stop it.
Yeah. I mean, it continues.
What do you do? As far you look at your trend line you got at the top there. That's miles away. If you want to short up there. Again, it feels like it's a bit in the middle. What do you do here? You don't want to buy it at the top. You're not sure selling it at the top either. But it's going to be a top.
Stelios, what do you think about with stocks up here?
Been driving.
What's that?
So what happened with yields on Friday, end of last week? 10-year US dropped quite a bit, and Jim Welsh was talking about that. Remember, he had one of the interviews you did with him. He talked about that there's a potential for yields to drop, and they dropped. So it's going to be a big week this week because we do have the FOMC payrolls, and they're definitely going to move things. But as long as we continue with this low yield environment, and I'm not talking 10, 20 basis points either way. I'm talking in general. I don't see anything that's going to change this direction. I've been saying this for weeks and weeks, and unfortunately, it's come out to be true because I really, really hate it. I want stocks to go both ways.
Well,
I don't have
you'll
a position.
be happy. There are cracks still in NASDAQ 100, which have made new highs, Blake, if you put the chart up there. But, stocks like Amazon, and we all know Facebook and their problems, and even Apple.
Meta. Don't you call it Facebook again. Meta.
Oh, yeah, Meta.
Jesus, what is wrong with you?
But even Apple's not at new all-time highs.
Yeah.
So, I mean, there are a lot of the leadership in the NASDAQ 100 is not confirming the move in NASDAQ 100. It's mainly been Microsoft that's been the monster.
Well, and Dale, I agree with you, but, and I say, but you should, you look at Russell 2000. I mean, it's just, we're stuck in a 2021 range. I mean, the Russell's not going anywhere. So you're right. It's just a few really big names like Meta. Not Facebook.
I'd like to see Russell break out to the upside already and get it over with.
Well, so let's take a step back here and let's go back to the conversation about the S&P, and let's go back to the conversation about the Fed and jobs report. And this is a point that I made on the week ahead video. A topic of conversation was what if the Fed is a little bit more aggressive? What happens to yields then? And that's question number one. But how about if we have a good jobs report? Because remember last month we missed the headline number. Unemployment rate came down, but we missed the headline number. So how about if we have a strong jobs report this week on Friday, and we have a Fed that's a little bit more hawkish, and maybe the taper is closer to 20 billion. What do you guys think happens to yields and stocks?
Well, theoretically, yields go up, stocks go down. But when was the last time we saw that?
Well, we haven't seen stocks go down in forever. But what happens when yields? Okay, let's unpack what you first said. Yields go up. So let's say yields do go higher, and we have let's go to the 10-year, and let's say yields break through 180 to the upside. Does that finally get the attention of the stock market?
I think it does. Yes.
Okay.
Yeah.
So Ryan, what do you think there? I mean, let's go back into my scenario. Fed more aggressive, and and then we have a good strong NFP.
I think stocks continue. Something that Stelia said, unless yield, really make a move, we're talking like breaking up through 2% really quickly. If we're just going to have a nice easy ramble back up to 170, maybe through 170, stocks aren't going to take notice, especially, what have they got? They've got a central bank hiking, and the reason they're hiking is because the economy is good. The jobs report's confirming that potentially in your scenario. Wages are up, good jobs market. You've got a strong US economy coming, and that's good, just as good for stocks as it is for yields going up. When all parts are moving along together, off we go. There's no reason to sell stocks, but actually now you've got a fundamental reason why stocks should be strong, because you've got a strong US consumer. It's only if you don't get those parts.
So what you're saying is
that's the old normal, not the new.
That's
normal.
the old normal, yeah. That's the old.
So what you're saying is the market wants its cake and it wants to eat it too. I see. All right.
Well, it did it last time, didn't it? When the Fed was hiking last time after we came out of the crisis, we had the big taper tantrum, and then what did stocks do? They made all-time highs. And on.
I mean, look, I'm not. But I think that what's the difference now between now and then is inflation, right? That's what the Fed's really. The Fed is like, do I fight inflation or do I let the economy run hot? Right? They weren't really faced with that question before. Like that wasn't.
No, that's the big fly in the ointment.
Right. So
as we know.
Yeah. So as it is, the Fed is like, hey, we're gonna have to raise rates because inflation has become quite sticky, and so we have to maybe taper a little bit more, or they decide no, what, we're gonna just let the economy run hot and let stocks run hot a little bit.
But Powell said that the other week, didn't he? He said, I can't remember what exactly it was. We're going to need to see. Oh yeah, we're going to need to see something like the lower paid jobs being picked up before we crimp demand or something like that. He actually said those words, that before they would come in with rate hikes to slow demand, he still wants to see more. So he knows that rate hikes are potentially going to put a stall in things. It just depends what level they're at before they do so. And if wages are still going up alongside higher inflation, well, the bite isn't too bad for the consumer. It's only if we start seeing a good jobs market, but those wages coming down, which they probably might do as the lower pay people come back into the market, that changes the average, moves the average lower. But if we start seeing, negative wage growth while we've still got strong inflation, well, then you've got your problem.
Yeah.
But do you think the Fed could be worried about the deleveraging in China? Because I know it goes into the background and people don't think about it unless there's a headline, but it continues.
Well, what are we worried about with China?
Deleveraging, a lot of financial problems that a lot of people don't think other nations have exposure to. They're the third, they're 30% of GDP, and I think is pretty determined to let things fail instead of bail everything out, and they have plenty to bail out. So contagion, Blake, basically it's one of the strongest economies in the world. And if they're going to have a recession, because even if it's intentional, I can't see that being a positive influence on global growth and bullish for a lot of things.
Well,
depends on what- on the
you know,
slowdown, though.
I don't know if they're gonna they care a whole lot about China. Well, let's just say the Fed. Until it's an issue,
Yeah, I
it's
guess.
probably going to be they're going to probably end up being more reactionary than
Yeah.
I mean, why should the Fed really care about China? I mean, right now, at this moment, I'm just
Okay.
I'm playing
I'm just
devil's
saying
advocate, I don't know.
they could be a headwind for the global economy that we're tightening or
Sure,
tapering
but that's an
into.
assumption. I think you got to start to see you really got to see China slow down before the Fed actually makes mention of it. I mean, that
Yeah,
is
okay.
their number one concern is going to be the US. And unless China is really slowing down, it's kind of like, how long did I mean, I don't know. That's just my initial thoughts.
Okay.
I don't think they're going to care a
Yeah,
whole
it
lot
could
right now.
I could be way off base.
But anyway, hey guys, I want to say thank you all for joining today. I know we a lot of people in Europe, well, and since Ryan's not there, Ryan, did you have to adhere to daylight savings being over since you're not in Europe anymore?
Yeah, it's a good one. We get the extra hour in bed.
Oh,
Yeah,
shoot.
you guys do get an extra hour in bed, and you know what? Here in the US, we get it next week. So
Don't rub it in, man.
yeah, I'm going to get an extra hour of sleep for a few months. This is great.
Yeah.
But I want to say thank you all for making it.
If Salah's not here, if you want to continue, bro.
What's
Maybe he
that?
got screwed up by my guess. Salah Boumidi.
Oh, okay.
Isn't here.
Perhaps you might want to reach out to anybody that's in that's outside of the U.S. This week, just to to make sure.
I forgot about that.
Yeah, I mean, well, a lot of us did forget. Stelios, Ryan, did you guys have anything else you wanted to mention going into today? Because I'm gonna have to step away from my computer for just a few minutes.
No, not from me. Go on, Ryan.
Yeah, I was going to say just one pair I'll keep my eye on is Euro Swiss. We had that breakdown last week, Friday. Next level I've got is down into 105. So that's sort of the area I'm looking at the moment. If you look on the weekly.
And this is one of those things that I want to say that we were just talking about in the chat room. You're like, well, as yields go up and stocks move higher, seeing the Euro Swiss move lower, it's kind of mind-boggling, isn't it?
Yeah, I mean the guys in the chat room, they've got their ideas that perhaps the Swiss bringing back some francs from stocks they've been selling, because they hold a lot of stocks globally. So that could be again another end of month feature that they've brought back the Swiss for those sales, because you would expect a pair like this to do similar to what the Japanese yen is doing.
Yeah, right.
From a point of view of you get a change in risk appetite, you change in markets. Rate hikes being talked about, policy normalization, tightening, all of that gets flows moving into riskier assets, and people want to go searching for better yields. So you'd expect to see Euro Swiss ticking up, and it's doing the complete opposite. So
maybe the brokers know something, because I heard they were raising margins on Swiss last week, increasing margins. A lot of brokers. Yeah,
well, again, that could suggest that there is some big forces at play at the moment going on in there, and they've sniffed that out. But it's one pair you want to be careful going short, because you never know when the S&P are going to be just sitting there on the bin.
Oh yeah, I do not like to short the
so I'm looking at those,
career ender. Yeah.
I'm looking.
I mean,
at
they literally ratchet that thing up, 50 to 100 pips within minutes. So it's like, seconds really. But there's another pair that's kind of a head scratcher right now, Ryan, and it's a pair that I'm long, but it's the Euro Mexican peso. Like you see the Mexican peso as weak as it is right now. Same with the Rand, actually. I mean, you look at these emerging market currencies, and they are weak in the face of strong equities, which, the Euro Mexican peso is coming in, getting close to this 200-day moving average. This is not the typical behavior you would expect of
That's a
currency.
risk off, right, buddy?
It is, and you see this thing's been ripping like since early last week. I'm happy because I'm long, but it's like, why is it going higher?
Canary,
it's the same.
Canary in the coal mine, maybe.
Maybe, and you could probably say the same thing about the Euro Swiss that's moving lower that Ryan was just talking about. Is this a canary in the coal mine? I don't know. I mean, people are going to try to give us some answers, as everybody's searching, but I'm going to let you guys figure out what you think the answer is. But I'll tell you one thing. This is the ForexAnalytix chat room. This is the Forex Flow live chat room where Ryan and his group, I say his group, but we're all in kind of, we're still, we all commingle now, but this is Ryan's previous group, right?
Yeah.
Now that we're part of the ForexAnalytix family. We have a news and research room where everybody puts like, research clips and whatnot. Trades room where everybody initiates, their new trades or, where they're getting in, getting out. We have a Spanish chat room for you guys, if you speak Spanish, obviously. And this is our general chat room. And you guys are all on Jumbotron. Dominic sees he's on Jumbotron right now. So, I just want to say, if you guys want to be in one of the most active chat rooms, I think, out there, come join in the ForexAnalytix family. Because we don't allow for religious talk. We don't allow for political talk. And if you mention any, like you try to sell your product, we delete your message and kick you out immediately. So it's a real safe place for traders, to just come in and talk about the markets. It's not, it's not any type of, sales platform or, political talk platform. It's just, we talk markets, and every once in a while we talk
Community.
about it's what's streaming on Netflix because we're so bored, sometimes on Friday
Don't
afternoons.
isolate, collaborate, guys.
Yeah, it's a great, I mean, this is just give you a good example. This is I got in front of my computer an hour and a half ago. Okay. And this is where an hour and a half was, and this is just the general chat room. That's an hour and a half ago.
Surround yourself with traders better than you.
That is all the conversations that's happened in the last hour and a half. So you guys can kind of get an idea of what happens in there.
A lot of action in there, man.
What's that?
A lot of action there, man.
There is. Yeah. And again, if you're like, well, I'm not really into chatting a whole lot, good. Just, clicking in the trades room, and that's where you'll find people that put up their trade, or go in the news and research room and go read all the news and research there, and stay away from chatting about anything, so, but there's a lot of resources available to you, and when you're at home by yourself trading on your own, it's lonely, and having a community is great, and it always has been. And I've realized that since 1996 is being around other traders, other like-minded people is where you want to be. So we'd love to have you there. I want to say, Dale, thanks for hosting. Sorry we don't have an interview for you guys, because these time changes always screw us up every year. We have 1 week of everybody's like, oh shoot, I thought it was an hour ago, and then or it was coming up, and we miss interviews, and then we have less attendees for a week.
Yeah.
Always happens. So
yeah.
Anyway.
All right. Well, so hey, guys, happy for your extended hour of sleep beginning next week, Blake.
Yeah, I'm excited for that too. So, well, Ryan,
I'll be an hour late,
guys. And we'll catch you. Tomorrow. So Dale,
no, you'll catch everyone in the morning edge in 45 minutes. 50
That's
minutes.
correct. I'll be.
See,
well,
he forgot that as well.
What's that?
He forgot that as well.
Well, the thing is, I'll be there, and it's going to be in 45 minutes or so, Dale, in about 35 minutes,
okay,
or whatever. But the fact of the matter is, we're going to start the morning edge, and we're going to have people that thought they were in the face webinar going, "Oh, I'm in the morning edge." It's going to happen. It happens every year. So anyway.
All right. Well, good hunting, everybody. See you for Turnaround Tuesday. One of our, regulars from quite a while, a pioneer interview guest, Lydia Idem Finkley, will be with us tomorrow to talk about all things cable, and she is confirmed. So we'll see everyone tomorrow. Don't just count your pips, count your blessings. And Blake showed you those chat rooms. You know, I teach, surround yourself with traders that are better than you. I'm sure you'll find a few better than you. And if you're good, what a great place for you to go, join up and give others a hand and help them avoid landmines you've stepped on. So that's a wrap, and I'll see everyone tomorrow. See you, Monica.
Cheers,
John,
guys.
my biggest fan, John. Great doing this. Thank you very much, and we'll see everyone tomorrow. Adios. You're welcome, Gorkum, Monica. See you guys.